Welcome back, everyone, to another one-on-one with Jerry Hall. Today, I get to bring you my second conversation with Real Vision CEO and founder, Raoul Powell. This is going to be interesting because you can tell over the last 6 months or so, Raoul has been deep into the digital asset space, not necessarily as it pertains to different projects, but what distributed ledger technology, blockchain, is presenting itself to the existing capital markets. He's going to talk about digital assets like Bitcoin and Ethereum building a yield curve, understanding collateral as it pertains to financial markets, how it's so absolutely essential, and Bitcoin taking its place as pristine capital. The macro view of this industry is so bright, it's time to go out and buy a new pair of sunglasses. That conversation is coming up right now. Raoul, thank you so much for taking the time to join me today. How are things on the little island there?
That's absolutely great. I can't complain. You're in paradise, I'm in paradise.
It is amazing outside of the US, the response to this. Like when I first had you on the show, COVID had just launched, right? And it was interesting how at that point you were kind of trying to take a look at how am I going to gauge the world's response to this? You talked about some things that could, what we would say supply shock, demand shocks, and you were kind of building this thesis of the macro view of the consequences of this thing. But we didn't really know how long it was going to last. We were all just kind of guessing, right? Well, Costa Rica, and I'm not really sure exactly how you did there on the little island, but Costa Rica kind of did a 2-3 week shutdown and then just said, okay, we're going to open up, go back to business as usual, but wear your masks. And when you enter stores and restaurants, you'll have the sanitizer protocol. We'll take temperatures, but let's get back to business. We're doing fine.
So we did it a different route. We had a hard lockdown, got rid of all cases, and then reopened internally. So we're all free between the islands to move around, do whatever we want, run business, and there are no restrictions now except travel.
Right.
So we sacrificed the tourism industry for the population health, and they did an extraordinarily good job of it. And people here, being Caribbean island, are pretty used to taking a bit of communal suffering for the good of society. It's a traditional society here, so old people are highly respected and adored. So therefore, anything to protect your grandmother is important. So it's a different society and culture.
Excellent.
They did a phenomenal job.
Some other changes or some maybe events, what have you, since the last time we spoke, and it was only, I think we talked, it was probably the very beginning of April, right? Well, I'm looking back here at this list of, you've got Real Vision has created the daily briefing. So an actual half an hour, 40-minute at the end of the market every day, Monday through Friday, a real time, this is what's happening. Incredible guests come on the show. There's a dude that comes on Fridays, does a pretty good job of putting out the macro view. You did a series called The Crypto Gathering, brilliant. You've just finished the Festival of Learning, brilliant. And you've announced the Real Vision Exchange, a community platform for interaction, long form, short form, it doesn't matter. Let's engage and interact with each other so that we all become better people and better investors. I mean, how many home runs can you hit in 4 months?
Yeah, all of those have been really big dial shifters for us. We're on a roll right now, and there's, the exchange is only starting its first iteration of where it's going, and then we've got more things, and there's some very big things about to come, particularly in the crypto space. That's about to happen. And some more features, and then more education products, and embedded in the membership tiers and other stuff. There's huge amounts going on. So we're moving fast and breaking things right now.
Well, I'm excited, and I'll tell you, since we last talked, my income situation is still the same. So I'm still $350 a month or so living. However, I've taken some of my investments and I have them working to create a yield in a wallet that I have on my, so I'm invested in a project called Cardano. It's a proof of stake protocol. And when I get to my level, that's going to be my subscription source. That's going to fund my Real Vision subscription, is my yield for my crypto investment.
Amazing, right? What a world we're walking into.
Yeah. So I wanted to dive into that just a little bit. There was a daily briefing on a Friday, and you and Ash were talking, and the Bitcoin's proof of work algorithm came up, and then the proof of stake came up, but you didn't get an answer. So my question, first of all, have you got the clarity you need to understand the difference between a proof of work validation algorithm and a proof of stake protocol?
Yes, somewhat. Now, remember, and this infuriates people in the macro community, I'm a macro guy. It doesn't actually matter to me.
Okay.
Right, I'm not building a platform. I have 2 bets right now, which are Bitcoin and Ethereum. Why do I have those bets? Well, one is the proof of work element of Bitcoin means that it has, and this distributed nature and all the other stuff we all know, means it's a great reserve asset for us.
It's
fabulous.
The pristine collateral asset on the planet, bar none. Into discussion. Next topic.
And then Ethereum.
Not so much.
No, but I don't think of it as, it's not the same thing. What Ethereum is basically a stake in a platform.
Yeah.
And a community and a bunch of smart people. And there's a lot going on there. Now, you could say the same for Cardano. You could say the same for a number of these protocols, and they're all equally valid.
Right.
But because I'm a macro guy, I don't have the time to go into the weeds on everything. So a lot of people say, well, what do you think about all the various DeFi projects? So I don't care. What I care about is it's happening. And what it matters to me is, as I've talked about, is we're creating a yield curve. People don't understand what's happening yet. We're creating a yield curve for the future expected value of some of these digital assets. Right now, we're working on the money market part, which is, what is the lending rates? Right, that's the start of a yield curve. For it to be a collateral asset, let's talk about Bitcoin, it needs to have a yield out to 30 years probably, because different collateral will be held for different periods of time for different people, et cetera, et cetera. So this will all come. But what's fascinating to me is we're starting. And yes, tons of these projects are going to fail. Tons of them, nobody understands the risk, and they think they're getting 100% a month returns. And then before you know it, over the full credit cycle or the cycle of a product, we'll realize that the return was maybe 5% a month or 5% in total. We don't know. Doesn't matter. The idea is, what I love is the whole space is embracing it like you are, to say, listen, this is really cool. I understand it's risky. Let's have some fun with it. Let's play around. Let's learn what it is. And we know that this is the start of a journey. And we will have a few boom bust cycles in this, but we're actually building something foundational here. And without this, we couldn't move forwards in terms of being a replacement to the financial system with some value of money. And this gives you future value of money. We need that.
Right. I found it really interesting as I continue to turn into Real Vision. What appears to me now, this is, a new guy to the space as opposed to a veteran like yourself, but it appears to me that it's going to be pretty easy to forecast monetary policy going forward, because from everything I see, and please correct me if I'm wrong, governments around the world have painted themselves into a near zero or negative rate world that they have no other choice. The debt burden is so great that if the cost to carry money increased, things would just collapse.
Correct.
Well, if you understand that and know that, doesn't it make where you're going to place your bets a lot easier?
For you and I, yes. Because as individuals, we have the freedom of choice. For institutions and pension plans, they don't have that.
I never thought of it that way. So, okay, then
This is why it's been driven as a retail revolution first and an institutional revolution second.
You know, I never looked at it through that lens. Let me ask you this question then. That would beg this question: wouldn't new products that can fit in that vertical from an asset class like, let's say, cryptocurrency, let's call it, let's go out on a limb, a Bitcoin ETF, that could be a lifeline to that.
Well, that's the point.
Element of the market.
That's what everybody's working on. It's interesting. We've hired a new crypto editor. He's well in the space that you're involved in, is all the projects and all the stuff that's going on. And he's like, you know, we need to be doing all of this stuff. I'm like, yes, we do. But just understand, the pension plan, the endowment, the family office, etc., the RAA, they so far are trying to get their heads around Bitcoin. And they don't have a product to trade yet. So they passed the custody regulation in the US. So now banks can custody. That means prime broking is coming for hedge funds. Hedge funds will be first into the space. That's clear. Paul Tudor Jones gave the green light. Next is Fidelity, and what they're building out in Fidelity Digital Assets means that people can custody and execute with a trusted counterparty. So if you're a trustee at a endowment or a pension plan, you're saying, if somebody comes and goes, okay, we're going to do this digital assets. Now, I understand it's new, but we're going to custody it and do it all through Fidelity. They go, oh yes, Fidelity, yes, that's fine. You know, so that's doing that. Why is Bitwise and a few others racing to try and get the ETF out? Because the RAA space can't handle Bitcoin.
Now, this is registered investment advisors? Is that what
Correct.
Okay.
Correct. So they're the people who advise average individuals, and they pull those things together and make investments for them. They understand that this is interesting, but they can't do it. And the regulators won't allow them to hold this digital bearer asset, blah, 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 because I'm buying it for you, but I'm holding it on my Ledger X.
Right.
That's dodgy, right?
Right. Yeah, they're going to fly.
Yeah. ETF, all gone. I can see it in my portfolio, all good. So these things, we have to walk before we run.
Right.
And the financialization of this space, in terms of what we understand today in terms of financial products, as you said, the verticals that these guys can use is crucial. It's not the future, it's the start.
No, I get that. So two things I wanted to unpack. You have a new crypto editor. So you have a department dedicated to digital assets?
I'm not going to confirm or deny anything, but we may or may be not starting a crypto membership tier and whole channel. But I won't confirm that.
Oh, okay. You did not hear that here first, folks.
You did not hear that here first.
You had posted something on Twitter about that, and immediately I was intrigued and thought, okay, I'm going to craft my resume. And then all my self-doubt and insecurities came in, and I said, screw it. I'll just be an investor in Costa Rica and do a YouTube channel and enjoy a professional product that Real Vision puts out when it gets put out. So good for you. You can't confirm or not confirm any other little teasers?
Well, there's not much to confirm yet. Just think of Real Vision and think of crypto. and think of what quality, balance, and depth we can bring to the space with the access that we've got and the understanding that we have, and the customer base that we have who all want to learn. So it's a very big deal. And I think it's going to be a huge launch in the media space. And as I said, actually, nobody's aware of it yet. I did leak it at the Festival of Learning to people that it's coming, but it's coming very soon, and it's going to be huge.
Wow. I'm excited. I'm also very excited about the exchange, this community platform. Now, I don't think it's secret because you actually have the link on realvision.com. Can we dig into that a little bit more? Because I'm fascinated about the concept.
Well, look, let me explain it for you. So Jerry has his own podcast, YouTube channel. You put out content, right? You're now hoping that the YouTube algorithm and you tweeting creates an audience.
Right.
We've got an audience. Just create a channel on Real Vision. Then you can engage people in the comment section. You can have a private paid version. You can have a free version. So the new media world is not broadcast and push. Here's our content, take it or leave it.
Right.
It's here's our content. Where's yours? How can we help each other? How can we all learn? Because the hive mind, which is a phraseology I use a lot, is much larger than any of us. Right? So I know that, like, if you're on there, you have deep expertise in stuff I have very shallow expertise on. You know, if I'm on there, I've got deep expertise in something you've only got shallow expertise. And we can multiply that across anything. And it's so powerful. Now, the problem with Twitter, and we're not trying to replace Twitter. We're much more about long form analysis, thoughtful, but Twitter is full of other stuff. Too much social commentary, too much political commentary for most of us who just want to check into the stuff for markets. I check my Twitter feed, I find it good for news, but if I want to have a good, meaningful conversation, well, the exchange is a better place to do it. Because I can make a video and just pop that on there. I can write a PDF and say, here's my research document about why I think Cardano is the best opportunity in the world right now. I could just write an article. I could just post an idea. I could post a chart. I could do anything. Now, it's all down to the community, whether you're adding value or not. If you don't add value, nobody's going to like your comments. And nobody's, and eventually over time, you'll realize you're wasting your time. Same as anything else. So the crowd chooses. And to allow it to grow organically with a few nudges in the right direction is going to be a powerful place for all of us to go to.
I like it. No, I really did. I don't remember where I caught wind of it, but I did catch wind of it and immediately thought, oh my goodness, you're going to eat up the world. Now, honest, between two guys, pretend nobody else is watching. When you got together with the other guys that put this together in the very, very, very beginning, did you have this vision that's materializing and rolling out for us? Bravo.
Yes.
Bravo.
Yes.
Well done.
A lot of it we had and could never get to. We were understaffed or underfunded and, going to go bankrupt this day or that day, all of the startup life. We've not been able to get to them. But all of this has been our roadmap since day one.
Excellent.
So I think community will play a larger part than we thought because the media space has changed over 6 years. But overall, layering education, that was always in our roadmap. Stuff like daily shows, always in our roadmap. I mean, a lot of this has been in our roadmap from day one. We just haven't been able to get to it.
Speaking of daily shows, I know that the COVID-19 experience, and as horrible as it's been for so many, did usher in the Real Vision daily briefing. And I've got to ask you this, is that going to continue beyond this COVID weirdness?
It's very loved. People find it immensely useful. People find it immensely useful because it's a daily show that scratches beneath the surface. Simple as that. Well, we all want that because we all have more than a passing interest in, Apple's earnings. We want to know a bit more. And the daily briefing gives you that bit more beneath the surface without being too deep. And if you want to go deeper, you go to Real Vision. And if you want to go really deep and ask questions of experts, you go to Real Vision Plus. If you really want to know what you're doing and get involved in portfolio construction, building out more complex things, then you go to Real Vision Pro. And if you want to meet other people like yourself and you've got available funds to do so, then there's the blacklist. So it's basically a flow of knowledge and access is what we're doing. And the daily briefing is free and it's for everybody because it's democratizing financial information. It's giving a lot of people higher quality knowledge than they get access to in a digestible format. Now for us, it also brings them into the Real Vision world because they start to understand, okay, these guys add real value. But for other people, they don't need to. They can just enjoy the daily briefing, and that's great too.
I could not agree more. I love that. So it's fair to say Real Vision is hitting on all cylinders and is pushing forward. Bravo, young man, bravo. Let's bring this conversation back to digital assets. And one of the interesting points that I keep hearing more and more, especially recently, is this term, Bitcoin is pristine collateral.
Yeah, I created that.
Well, thank you, young man. Thank you. This was not a term used a year ago.
It wasn't. I wrote an article and came up with it because I've been thinking about it. Speaking to a guy called Travis Kimmel, who's another Real Visioner, he's a good friend of Real Vision. I was speaking to him and brainstorming about the DeFi space, and we started realizing about yield curve and all of the stuff that you and I were talking about. But then it dawned on me that for a financial system to work, you need collateral.
Right.
And if you think about the issue with collateral now, right? So collateral now for the world system is basically US government bonds. You can use European government bonds, JGBs, but really, let's call it US, the most pristine collateral. The most pristine collateral, when the business cycle turns negative, which it does, it usually means everyone's like, oh, I've got a little too much debt and not enough revenue.
Uh-huh.
And you're a borrower, you're a lender, you say, I need some more collateral to prove that you're not going to go under, right? So collateral comes into a shortage. So that's me saying, I want some more of your treasuries right now. So everyone delevers. That's what happens. Now, the problem is the Fed realized this and saw, well, how can we stop the business cycle? We can make sure that the market is amply supplied with collateral. What does that do? It means that rates can't go up.
Right.
So if rates can't go up, you are not allowing the business cycle to function. Okay, that's the kind of Austrian economics argument versus what everybody else is doing. Fine. The other issue is that there's too much collateral getting issued. So the value of your collateral is going down, right? So you own US government bonds. On paper, they're not falling in price, but your relative ability to purchase stuff because of all of this fiat money debasement. Again, we're not talking about dollar collapse here. We're talking about all fiat currencies going down versus hard assets. So therefore, your relative purchasing power, not in CPI terms, but in broader terms like property and asset terms, has gone down. You're being forced to use that collateral. And when you lend collateral, you're getting low rates because the Fed are keeping it low. So you've got no benefit from owning the collateral except you're forced to. Now, if you go to a Bitcoin world, you can't issue any more collateral. So the business cycle is prevalent, which is good because therefore you don't build up excesses.
Let me stop real quick because for clarity. Are we starting to talk about the relative juxtaposition between tightening and easing in that dynamic to create this value proposition that you're saying the pristine?
No, I'm talking about the business cycle. Whether it's driven by the Fed tightening or easing rates is not clear because it existed prior to the Fed.
Okay.
And the Fed have been trying to fight it ever since. But really, if you look at all economic history, we have booms and busts. It's the history of mankind.
Right.
And usually that's generally related to the credit cycle. People borrow too much in good times and they can't service it because something slowed down, whether it was a bad harvest in the old days or whatever it is. So that is still there. You could show a small child a chart of GDP and say, well, economists think this trend's flat and never changes. No, it goes up and down. It's a sine wave. Everybody can see it's cyclical. So we live in a cyclical world. So in that world, the Fed try and stop that cyclicality. And that's what's driving down interest rates and other stuff. So let's say we go into a world where there's a collateral shortage now, and the collateral is Bitcoin. Firstly, in that shortage, nobody can issue more of it. So the cost of that collateral goes up. So I'm a weak borrower now. I can't pay you, who's saying, hey, give me some more collateral here. I'm going to have to say, I'm sorry. I'm going to renege on my debts. I borrowed too much money. I won't do it again. And the debt creation mechanism gets reduced somewhat. So we end up in a healthier economy. But if I own that collateral, so I'm like, okay, I need to borrow some collateral. I need some Bitcoin because I need to pay Jerry. So I go to the guy over there and go, hey, listen, how much for your collateral? He's like, well, my collateral's pristine. It can't be devalued and it can't be oversupplied. So you're going to have to pay me more money for it than if you pay me for treasuries. So maybe Bitcoin as pristine collateral trades at higher rates than treasuries, which would be perverse because high rates to us is a world of, well, there's either inflation risk or GDP risk or default risk.
Right.
But this is the opposite. It's like you have to pay me a higher rate of return to borrow my perfect piece of art. If you want to borrow my Picasso, you're going to pay me 10% a month if you want to put it in your lounge. If you want to borrow my US Treasury, yeah, you can pay me 0.5% a year.
With a structure that's guaranteed.
Correct.
Guaranteed. There's no law.
There's no default.
Come into effect to change it.
Now, why it works, so those things apply to gold too, except there's not much of a yield curve applied to gold. But these things work for gold too. But where Bitcoin works is I can transfer collateral to you immediately.
Well, gold doesn't have that cost to carry issue. I mean, you got to store it, you got to do that. I mean, there are overhead elements to gold that aren't present in Bitcoin.
And the instantaneous ability
is a functional monetary tool.
Okay, and then the other part of this, so A, I can transfer collateral immediately. You can call me up, say, you pay me now, I want my collateral. Right? I'm not going, well, I think I've got gold stored in a warehouse and I can send the entitlement over. Right? None of that all goes away. And sure, you can do gold on blockchain. I get that. But the other point is, okay, so now Bank Jerry, you've got thousands of loans and pieces of collateral, and the shit hits the fan. We've got a serious recession on, right? And like 10 of your customers have gone bust. In the old world, it's like, well, who owns your collateral? Can you pay me? Oh, well, that's promised as well to them, and it's promised to them. This world, it's on the chain. It's yours. Because you have a contract that says it's on the chain, and therefore it's mine. And that's why smart contracts, in terms of attaching to, let's say, Bitcoin, so that's why Ethereum on Bitcoin on Ethereum can make some sense, is we can attach a smart contract for that. So that has value as well. So this is where the interest components are going to come from, is from the smart contracts that go on top of Bitcoin for extended lending periods and collateral. So then you can say, is your collateral free and clear? It's provable because it's in the smart contract.
It was already locked up 6 months ago when we entered the agreement.
Correct.
I know it's good.
And nobody else can have a claim because of the nature of blockchain.
So you are a veteran. There's not a lot of things in markets that you haven't seen or charted or thought out or written about. And here is this space just maturing right before your eyes. Is there a little pep in your step when you get up in the morning?
Yes, and I have seen this once before, but I was
Oh,
much later. The derivative market.
oh, okay.
It's a quadrillion-dollar market.
Oh, that space.
And that was huge. Almost nothing we understand about life and financial markets would exist without it now, right? It was revolutionary. It has its downsides, of which one of the reasons this whole space is exciting is, yes, it will have derivatives and all of the leverage and all the other stuff that we do, because we're humans and we want to repeat the same shit. But there are some differences, and that's the interest of the space. So yes, I'm incredibly excited about a revolution, because derivatives was an overlay onto an existing structure. This is a new structure where we can overlay some of the best parts of the old structure. So it's a different foundational base.
I don't know why, but it just popped into my head. I remember on Real Vision, I saw this incredible Grant Williams, Mark Cahotis interview. And Mark was at his barn on his chicken farm with Grant. He was talking about his play, literally his version of The Big Short, right? And he had placed a big bet with Goldman, and he was right. And those bastards didn't pay him. In this new system with smart contracts, that's all being governed by code that's pre-written, preordained, unchangeable, immutable.
But don't forget, if you look at half the jobs that go on in financial markets, it's like settlements people. We can have streaming payments.
The back end treasury office. Oh yeah.
We can just have streaming payments. So let's say you default tomorrow, I'll have been paid up to the minute before you default. Right? I mean, these are the magnitudes of things people don't understand, because so many people come from the crypto space and don't come from the financial space, or people in the financial space don't yet understand the crypto space. But, I've been involved in both, and I can see the huge revolution that comes. I mean, micro payments, swaps and bullet payment, all of this stuff goes away. So much stuff goes away because you could accrue in real time. So you know that they're going to pay their payments.
And with the offset, so adjusting risk is that whole industry is going to change. Risk is going to be different. It's going to be viewed different. It's going to be measured differently. Wow.
I mean, does Bitcoin become, and again, we're not talking the next 5 years for sure. We're probably talking the next 10 or maybe even longer. Does Bitcoin become the risk-free rate? I don't know, but it could do. And then you've got a globalized risk-free rate. That's very useful on a global reserve asset.
I see it, and I agree with you. The only thing where I come from is, instead of everything being Bitcoin, it'd be a digital asset.
Yeah, Bitcoin itself is good for that purpose.
Right.
Everything else gets built on the other platforms. And the digital asset space, I think, is absolutely enormous.
Well, that whole premise, doesn't it hinge on liquidity? Bitcoin has to increase in liquidity. It has to get
Jerry, it's really simple.
Bigger margin cap, right? A bigger market cap.
Very simple. You're allowed to front run in Bitcoin. And I'm going to give you the biggest front running opportunity of your life. They will get an ETF across the line. There will be billions of dollars that pour into it. Every pension plan will allocate some money to it. Every family office will allocate some money to it. And the more the price goes up, the more they will allocate, because the larger the market cap of Bitcoin is. We know that all of those conversations are going on because my friends are having them. We all know that. We know what Mark Yusko's trying to do. We know the get off zero, right? This is an opportunity for retail to front run the institutions for once, as opposed to Goldman Sachs front running us. Or, not that they do, but what's happening is, it is allowing, I think, a redistribution of wealth to individuals Now, obviously, they're basically front running their own pension plan. So partly you're robbing Peter to pay Paul. But the point being is you're taking the middleman out of the making of the money, because we've got a wall of money coming into this. And I've seen it before. I saw it when Goldman Sachs kind of created the GSCI commodities indices and then went out and marketed commodities to all the institutions and said, you should have some exposure, do an indices, blah, blah, blah. And billions of dollars went into it. And we had a massive bull market from 99 till 2010 or 2008 in commodities. I mean, huge. And that was driven by the wall of institutional money. And this will be the same. And the more it goes up, the more they have to get involved.
You know, and I agree with you. I agree with you that the next leg of this race or journey or whatever you want to call it is going to be the institutional element. I'm not going to say the retail market petered out, because it's not petered out, but I don't think it'll have anywhere near the impact
correct
on this space that the
because to move, don't forget, previous times it went from 10 billion to $200 billion market cap, right? To move a $10 billion asset that has restricted supply.
Sorry, folks, for that abrupt stop. We had a power outage in Costa Rica, and when Raoul and I got back on the Zoom, I, like a knucklehead, did not ensure that when I pressed the button that it was actually recording. And the next 35 minutes of incredible conversation will be lost forever to everybody except Raoul and I. So let me quickly summarize. Where he was going right then and there was talking about it's kind of an order of magnitude kind of process. To go from a 10 billion market cap to 200 billion didn't take that much action, and therefore the retail investment space was able to drive and affect that. But as this grows, it's going to be a little different than that, and what it's going to take to make it grow. So one of the elements that you'll hear so often in the crypto sphere, whether it be FinTwit, the stuff on Twitter, or YouTubers putting out stuff, is institutional money is coming. It's like a tsunami. It's like a wave, and it's just going to blow this thing up, and it's going to the moon. Well, let me tell you, having talked to Raoul and understanding from his experience, having him live through the creation of derivatives and what it took for that market, which is now a quadrillion-dollar market, to get going and get up to speed. It's more like just a nice, gentle rise in the tide. It will not be a wave. Now, this is important to note because so many of us have expectations as it pertains to time horizons. Feel free to listen to whoever you want to. I'm listening to the people that have been there, done that, wrote books, and are now freely sharing this information. And what they're saying, it's going to take some time. Don't be in a hurry. But all that stuff about front-running Wall Street is still very much true. We're the early adopters. So continue to practice your plan at dollar cost averaging. It will all be worth it. So anyway, I'm now going to transition this. I'm going to leave you with a video from Raoul announcing Real Vision's crypto segment. It's going to be free for the first 30 days. So I encourage each and every one of you to go to Real Vision, check out their crypto tab, and be sure to watch Raoul's interview with Tom Jessup, the CEO of Fidelity Digital Assets. I think you're going to glean something from it. I sure did. So folks, enjoy the video from Raoul, and we'll catch you next time on 101 with Jerry Hall, Pure Vita.
Hey all, if you look at your screens, you'll see that there's a whole new channel launched, Real Vision Crypto. I've been alluding to it for a while. As you know, crypto and macro have smashed together and our futures are now massively combined. There's an exciting new world going on, and I urge everybody to get involved. It's going to be free for the first month, and after that there'll be an opt-in strategy, And if we get what we're doing right, it'll end up being a super low cost add-on, and we'll charge the outside world. The idea is to grow this space fast and become the dominant force in the space, because it certainly needs an unbiased, curated, high-quality, in-depth analysis platform that Real Vision provides. So if you're interested in crypto, or even if you aren't, I urge you to take some time to look at it. There's going to be some incredible content coming, and we're going to take you on that journey of knowledge from hearing about it to becoming an expert. And then we'll follow the space and analyze it as it becomes more and more part of our everyday lives. Anyway, another exciting development. Feel free to use the exchange, start talking about it. There are the crypto channels, don't forget. There's crypto Bitcoin, crypto alts, and crypto DeFi, because there's a lot of you talking about all of this, so get involved in the conversation. There's also another one, which is Real Vision Crypto, where we'll post the links to the videos, and you can talk about the content there as well. So anyway, knock your socks off, enjoy it. It's value add from us, and I really, really hope it helps. Thanks, bye.
So this is what he's talking about. This is the screen for Real Vision. Videos, reports, crypto, and the exchange. I'll be participating on both. So come, join in, have fun. Thanks all. Pure Vida.